Hi, everyone. Thanks for joining. Lots going on in the markets right now. Let's dive straight in and look at the chart. So as you can see, I always start with this one. It is the World Equity Indices because I think it gives us a really, really nice overview of what is going on. Now, it's Tuesday. It's in the afternoon. US markets have opened. If you follow my pointer here, you can see US markets have opened slightly higher. Not by much. We've really seen very slow gains. Actually, Europe, if we look here, so again, follow my pointer down, you can see some losses. It's a sea of red, apart from the Italian index, which is just in positive territory, and the FTSE 100 is just in negative territory there. But I just want to bring you along across over to the FTSE 100 here because it had a really big milestone at the start of this week. It closed above that key 9,000 level. So lots of bullish calls now for the FTSE 100. And if we just delve into that a little bit more now, if you just bear with me, I'm going to pull up the chart so we can really take a look at it. As I said, it's a record high for the index. We had flirted with that 9,000 level last week and reached a record high, but the close above that level from a technical perspective, it makes it very special. So a lot of people now looking for further gains. And if we just go back to our World Equity Index page, as you can see, this is year-to-date performance in dollar terms and also in local currency terms. So in as you can see, it's risen. It's just done so much better than the overall Euro Stoxx index, than the S&P 500 and the NASDAQ index there. So who would have thought that the dinosaur FTSE index would be outperforming the NASDAQ? But it sure is this year. It's not quite performing as well as the DAX. So the DAX is up 21% in dollar terms, 36% in euro terms. The euro is obviously done very well against the dollar this year. So too has the FTSE 100, which is up by 18% in sterling terms. If you convert that into dollar terms, 10%, but that can still be compares very favorably to US indices. Now, what has been driving the FTSE higher? Well, let's just dig a little bit deeper into that because it's really led by a few sectors. Fresnillo, that is the miner. So miners have been absolutely huge this year. What with that rise in the gold price, iron ore also hit a multi-year high today on the back of expectations that China is going to boost its economy. So that's really boosted the miners this year. But we've also got that defense theme. If you look, BAE Systems, that's like 63%, 61% year to date. Rolls-Royce, another top performer. Remember last year it was a top performer, up more than 80%. It's now up 73% so far this year, with of course Fresnillo there up 138%. But even Lloyd's Banking Group, that's up 41%. So a lot of strong performers there. We've got some weakness there. WPP down nearly 50%. Diageo as well. Remember that's had a lot of problems, very at risk with tariffs. WPP is just kind of losing that race in the with so much competition now coming in through AI and other advertising platforms. WPP really struggling. We've also got EasyJet down 11% year to date. So this, in terms of how they're performing so far this year, shows really what's driving everything in the FTSE 100, and it's got those key sectors, as I said, defense and also mining. But if we actually look just in the past month, we're still seeing some of those themes play out even now. Antofagasta, another miner, that's up 17%. Anglo American up 15%. Rio Tinto up 13%. Standard Chartered, that's a bank, up 13% as well. And then we've got International Consolidated Airlines, owner of BA, of course, up 18%, which is quite typical during the summer months, don't we all agree? But what essentially it shows is that mining theme, the defense theme, the banks, they're all doing well. They're all helping to they're really good foundations for the FTSE 100. And that leaves it in really good stead for the rest of the year. Now, I don't want to spend too long on this. As you can see, this is the FTSE 100 chart there, record high territory. We just don't quite know where we're going to go above 9,000. We might need another driver. So we could hover around that 9,000 level until we see what's been going on with tariffs. Obviously, those risks are really building, what with that August 1st deadline. And that's why we think that we're seeing this kind of caution set into markets as we near the end of July, the last kind of week or so. No, just under 2 weeks now of trading for July. So we're seeing kind of stock market gains get less and less. Let's look at the last 5 days, how stock markets have performed in those 5 days. they're kind of eking out gains or eking out losses. So about a 1%, 1.3% gain there for the NASDAQ, 8.87% gain for the FTSE 100. So we're not taking a massive leap to the 9,000 level in the FTSE 100, but it is a kind of grind higher. And anyway, it's important because we've got the markets in the UK doing one thing, but the economy doing another. We had some very weak borrowing data out of the UK today, so borrowing much more than expected. Initially, we saw bond yields rise quite sharply, as one expects when you're borrowing more than expected and the market expects. However, since then, it's actually fallen. So we saw a big fall in UK yields yesterday. We're seeing the same thing happen today. So there's been quite the turnaround. If I go onto the 10-year yield as well, you'll see it's the same. 10-year yields down about 1%. 1 basis point, not 1%. And we've also got United. They're very much following in line with Europe, following in line with the US as well. So no big outlier there, even though the UK economy is borrowing more than expected. But this week, as I said, we're looking for drivers. So one of the drivers, ironically enough, could be Tesla. So Tesla will report earnings tomorrow night. That's on Wednesday. And they report after the market closes, so usually about 9 or 10 o'clock London time. Now, Tesla has been really interesting because it's in this real range, and it has been for the last couple of months. So we've got this downside support here, which is the green line. That's the 100-day moving average. That comes in at 292.86, currently trading at around $329. And then we've actually broken above 150-day moving averages. So there is some upside there, although the moves are quite small and we have been kind of oscillating between up days and down days. But what I want you to notice is that the candles are quite small for Tesla, not like we saw there. If you follow my arrow here, massive candles way back in June. That was when we got announcements about falling sales and the fight, of course, between Elon Musk and Donald Trump. Now, one thing that's quite interesting about Elon Musk and Donald Trump feud, Donald Trump said that he would try and defund any company that was owned by Elon Musk. There was actually a report in the Wall Street Journal over the weekend that the Department of Defense in the US and also NASA, so the space program, they actually can't get rid of SpaceX and SpaceX contracts. In fact, they've increased SpaceX contracts because the technology that this Elon Musk company provides is absolutely vital to the defense of the US and the safety of the US by and large, because it's got obviously a Starlink potential as well, but also to the NASA space program. So it's harder to get rid of Elon Musk than you think, but we have got those earnings data. Now, earnings, as you can see, just follow my my pointer here. They've been revised lower for the earnings report that's coming out on Wednesday night. So we've got earnings per share that's expected to come in at 42 cents, so just about in profitable level. We've got revenue of 22.6 billion with net income of 1.44. Now, these are all, I'm just looking at the prior period just to compare it with. So revenue is expected to pick up. That's expected to be, that was 19.33 billion in the previous quarter, with net income as well at 934 million. We are used to some pretty wild results from Tesla, but there is a sign that there could be some stabilization. So a bit of a pickup, better pickup in revenue. That's on the back of stronger sales of the updated Model Y. So that they've come in pretty strong around the world, and we'll be looking really interested to see the breakdown of that. And then we also have expect higher net income. Now, follow my pointer again. The average move of Tesla's share price after an earnings report, in the one day after an earnings report, is more than 10%. So this is going to be a very volatile stock. So going back to that chart, yes, it's doing really, really small candles at the moment, small daily moves, but it can be explosive earnings reports. So I've looked at Tesla's quarterly earnings reports for years and years. I've seen them both on the upside and on the downside. So it can be absolutely explosive, but watch it. I would say with the Tesla story generally, there's a lot of bad news. The market seems to be able to absorb that quite well. So it has to be a really bad report for them to, for it to, weaken substantially. And by substantially, I mean, more than 5%, because remember, it is a super growth stock. The other thing that could really entice investors is if they give any sign about how much revenue in the future could be generated by robo-taxis and their AI arms. Those two things are interlinked, robo-taxis and AI for Tesla. So if they give any updated revenues of that, they have said it could be as high as 35 billion per year by 2030. We're going to be watching out for that. So high expectations for robo-taxi there. And I kind of get the sense, that the market, as you can see, in the last 8 quarters have pushed up the share price up in the one day on average after an earnings report. So there tends to be some kind of positive bias coming out of an earnings report for Tesla, even if they don't actually report fantastic earnings. So just that's something to watch. Now, Alphabet will also, that's the owner of Google, they'll also report their earnings on Wednesday evening as well. So it's going to be busy for us analysts. But as you can see, some fantastic moves here in Google's share price or Alphabet's share price, back to the highs from February, before kind of we got that big decline. So it really has done very, very well. We are looking for earnings. So let's just take a quick look at what the rundown is. 79.59 billion in revenues for last quarter, with 30.93 billion for net income and earnings per share 2.38. So they've been revised a little bit lower, but as you can see, some really big numbers. Now, the key things to watch for Google is obviously their advertising revenue. That's really, really critical, but their search. So they are expected to surpass expectations for search. And that's where their AI, so their Gemini AI product, is really leading the way. Now, most of us will use a Google search engine. I think we can all say that the Gemini has really enhanced that process, and their AI features have really enhanced their search feature over the last year, and it'll be interesting to see if that's reflected in their results. So there is an expectation that search will surpass earnings, also cloud, because we do know that their cloud infrastructure, that's a big part of their business. There's a lot of people buying infrastructure, investing in AI. So will their clients be really focused on their cloud earnings as well? Because we do think that a lot of the consensus around the Google Cloud revenues are quite low. So we think that, you know, they're looking for about 27% increase year on year. That could easily be above 30, but we've got to wait to see if that happens. As you can see, estimates here in the chart here, if you follow my pointer, estimates are in blue, actual earnings per share are in orange. Google has a really good track record of surpassing estimates. So for some reason, analysts are quite downbeat sometimes on Google. I would point out as well, the average move in the 24 hours after an earnings report is 6.23%. And we definitely saw that big increase. If we go back to that Alphabet chart, that big, we've seen kind of quite big collapses in Google, but we have seen big increases as well, including yesterday, including in recent sessions, when we've had much better earnings reports. So that's just something to watch, about 6% average move there. So overall, we've got lots going on this week. Markets are definitely looking for another driver. We've got earnings reports. We're also leading up to that tariff deadline. So the market's going to be really sensitive, particularly US stocks, to any headline news. So thanks so much, everyone. And I'll speak to you soon.